Core does not have a vision to be the next mid-tier gold company. I'm not going to sit here and tell you that, we want to be a 1,000,000 ounce producer in a decade. It's more about assets we feel we can invest the small amounts of capital that Core can afford to de-risk.
But you used a phrase there and said, no one would mind that. What do you see there? Why have you chosen this as the next target? Because it doesn't sound anything like what you've got at Imperial. So what are you going to try and create there? Hello and welcome to Crux Investor. First of all, thank you so much for watching this video. If you like it, give us a thumbs up and please do leave your comments. It just helps us understand what questions you'd like us to ask, what you're thinking, and your sort of general feedback as to what we're doing, so it helps us improve the product further. And if you haven't already done so, could you click the subscription button in the corner? And if you want to see more videos like this, click the notification bell. We spoke earlier today to Scott Trebilcock, who's the CEO of Core Mining. They're a TSX listed company with assets in California and in BC. Their core project is Imperial down in California, and they're developing that just on a PEA. We'll take that through over the next 2-3 years into build ready, at which point they will bring someone else in or sell it to a mid-tier producer. So we talked to them about their business plan because they describe themselves as a portfolio gold company. We want to know exactly what that meant. We got a fairly straight answer from Scott, which we appreciate, in terms of how they hope to monetize the other 3 assets. And we talk about the longevity of the company and how you do actually create shareholder value. So great conversation with them. Take a look in the description below. We talk about a bunch of other topics. Click on the relevant timestamp if you want to go to that part of the video. In the meantime, let's hear what Scott had to say. Hello, Scott. How are you, sir?
Excellent. Thank you for having me.
So where are you speaking from?
I am in Vancouver, Canada.
Are you paying attention to the rules? Are you staying indoors?
Yes, you can see in the background here, I am locked in my house with my family, and we're persevering quite well, as is so far the company. So yes, I'm getting to know a lot more about my kids, that's for sure.
Wow. Well, I guess that's nice, right? Hey, Scott, this is the first time we've spoken to your company and yourself, so why don't you give us a 1-minute overview of the business, and we'll pick it up from there.
So I'm the CEO of Core Mining. Core is a portfolio gold company. We are pursuing 2 paths to value creation. We have a project that we're moving into the development phase. So we're moving a project, we've just completed a PEA, and we're moving into permitting to construct a mine. Over that asset and the other assets in the company, of which we have 3, we are also doing exploration. So both by exploring and developing in our portfolio, we're going to add shareholder value. The company is very new. It was put together in late 2018, really 2019. We've attracted the mezzanine level strategic investors of Eric Sprott and Macquarie Bank, and we're just getting rolling doing work on the assets. So exploration and development in the gold business, and really a fresh company to the market.
Okay, what's your background? Where have you come from?
I'm a process engineer, Canadian born, spent most of my career working there, most of it in the mining sector. I started out at Hatch, I went to Noranda. I did take about a 10-year break to management consult down in the United States, which was a great learning experience. Came back, I was living in Toronto, got a call from a person I'd met asking me to move to Vancouver and join a company called Nevsun Resources. Nevsun's well known because it ended up being about a $1.8 billion takeout by the Chinese in late 2018. We developed a mine in North Africa. We had another great project in Eastern Europe. And we went down that full development path from construction to building out a company. It was eventually taken over, and I think it was a great return for shareholders. I came to Core to do the same thing in the gold business.
Okay, so you've attracted a couple of, Eric Sprott, nice name, Macquarie coming in early, unusual. So you got to have something. So why don't you start off and try and, if you could define what a portfolio gold company means to you. What is it that you're trying to build?
So let me tell you a little bit about the history of the company.
Mm-hmm.
So the company was founded by a gentleman named Jim Hines. Jim is the exec chair and the largest shareholder today. And he believed that the business proposition for the company was to find a sector where assets are cheap and move those assets into particularly picking a commodity, and he picked the gold commodity, where he thought in 2017, no one cared about small cap gold companies. Gold, people were not paying attention at all. Go in, acquire assets, build up a portfolio of assets like a bank and have those assets have real value, so resources in the ground. And then going into a market where someone cares about the commodity, you can create value increase on a per share basis and on a market cap basis and move those assets forward. Core does not have a vision to be the next mid-tier gold company. I'm not going to sit here and tell you that, we want to be a 1 million ounce producer in a decade. In the end, we've bought assets at a very cheap valuation point. We want to raise capital to de-risk those assets, and we believe the ultimate exit is along the path. A mid-tier miner that's already established will come along and take the projects away from us, but we have to go down the path of developing them as long as we have to. So, we're prepared to take the Imperial Project, which is our flagship development project, right through to production if we have to.
Okay, so let's look at those two moving pieces, which is you identify projects. Let's assume the gold thesis is true. Jim said, gold juniors is good. Let's get after those. You identify companies. So who in the team is qualified, or what are the criteria that you look for? Because obviously everyone's looking for good gold assets all of the time, right? So what specifically were you looking for which allowed you to say, okay, that meets all our criteria?
Yeah, now the assets in the company today were put together before my time. But, in speaking to Jim about it, Jim, he wanted assets that had large resources in the ground that were developed by large cap companies. So not a little junior project that drilled out a few ounces in whatever little northern state or province of BC or Australia or something. He wanted a project that had been left behind by a large company at some point in the past with a large resource base. And we ended up picking up 2 of those privately before the company went public, both of them in California. The Long Valley project has 1.7 million ounces, and the Imperial project had 2.2 million ounces. And the projects were there because in the 90s, the Clinton administration and the environmentalists had chased the miners out of the deserts of California. And, Goldcorp, at the time it was Glamis, had left behind in Imperial, and Royal Gold had left behind Long Valley. So these assets were, at the time that those 2 companies were involved, they thought they were going to be mines. And we're able to get those assets at a low price. And we believe the environment has changed where we can then take those assets forward.
Okay, so it wasn't a case of surplus to requirements. It was or too small to be of interest to them. It was a case of they had issues with the politics of the time, with Clintons, etc. So, what does large resource mean to you? So that they had obviously had a lot of work done to them, but what are the numbers involved?
Yeah, that's a good point. Large is probably what sort of in the gold market I'd call mid-tier assets. I mean, a small company like Core can't take a large $1 billion capex porphyry project forward. I think that's even in the gold markets today, that's a really tough proposition. The type assets we're talking about can produce, have the potential to produce 100,000 to 200,000 ounces a year for a 10-year kind of period. A nice mid-tier kind of assets, not the kind of asset that Newmont or Barrick or these guys are going to buy, but it's the Agnicos, the Centerras, the types of mines that these companies like to build. That's what we define as big. So, our assets, Long Valley's 1.7 million, Imperial's 2.2 million. And that those, you can ultimately get a reserve out of those size deposits.
Right, and because you're not going to get them into production, I guess you don't necessarily have a specialty. So are you looking for low-grade bulk? Are you chasing veins? I mean, what type of, again, ore bodies meet that criteria that Jim set out to identify?
Yeah, correct. Yeah, that's a good question. Right now, we're really in 2 terrains. So the 2 projects in California are and also part of the reason they were left behind. When I say the gold miners left California in the 90s, gold was also $250 an ounce. and these deposits are, 0.6 and 0.7 grams. So they were also at the time rendered uneconomic by ultra low gold prices. Gold price subsequently in the years after they left the projects, obviously had the big run up to eventually $1,800. But The projects were already on the shelf at that point. And so really the two projects in California are bulk disseminated oxide gold deposits that are typically lowish capex to get in production. They tend, the grade means they tend to be mid to high on the, middle of the cash cost curve. So these are not, the Fostervilles or the Chase and high grade veins. Now up in, we also have two projects up in British Columbia. And in the British Columbia project, the one we're drilling right now, it is a structurally controlled vein deposit that we're looking for some underground potential. So, I think we're open. We don't have a specialty in the company for a particular type of deposit. It's more about assets we feel we can invest the small amounts of capital that Core can afford to de-risk.
Okay, I mean, see, again, this is all fascinating because it helps us understand what different management teams set out to do, what the core skills are, and how they see creating see how they can create shareholder value without it being a throwaway phrase, right? So if you don't mind, we'll just stick with this for a little bit longer. Okay, so if we take, for instance, Imperial, so how much money have you spent on that to date, including acquisition?
Let's see. So the acquisition deal, we bought the asset from Goldcorp. So one of the other founders of the company and second largest shareholder today, a gentleman named Adrian Rothwell, he had, when management changed at Goldcorp, when Dave Garofalo came into Goldcorp, took over from Chuck Jeunesse, just sort of tracing the Imperial Project, Chuck Jeunesse was a Glamis person, and he was in Glamis when they tried to, push the Imperial Project before in the 90s. So he had an attachment to it, and it was still sitting kind of in inventory in Goldcorp. And when David Garofalo took over, he's like, what's this stuff? Get rid of it. And Adrian had just left the organization, knew the corp dev people, and was able to kind of work his way in there without really going all the way up to the top because it was such a small thing. Buy the asset at a very low price. So $150,000.
Wow.
Bought 2.2 million ounces in a project, which seems absurd in an up gold market, but that's what the thing. There's also, on the back of that, there's also a series of payments. So now to Newmont, because Newmont's since taken over Goldcorp. So we have to pay $1 million to Newmont in shares, actually in Core, coming up on the back of the PEA, and $1 million when the mine goes into production. Then since then, we've probably put $2.5 million into the ground since taking over that asset of, really compiling data, putting the company together. We hired a great chief operating officer to run the project, and he's got a very unique skill set, probably worth talking a bit about. A guy named Mark Leduc. Mark is a lifetime career heap leach mine expert. He's built them, he's scoped them. He's been the CEO actually of several junior companies. And most importantly, his last role was the chief operating officer and short-time CEO of Newcastle, I guess it was called, which is the Castle Mountain mine. That's in California. It was a project that was successfully taken to the construction decision and was taken over by Ross Beaty's Equinox Gold. So Mark found himself with California experience on heap leaching, where he was he lives in Denver, Colorado, Canadian guy. It's a perfect guy to come in and run Imperial for us. So brought in Mark, and then he's ramped up the team on stakeholder engagement and now completing the PA on the project. And that's where the money's gone. A lot of money has gone in the ground.
Right, a lot of money gone in the ground. So it gives us a sense of the sorts of quantum. You've got some G&A in the background, but that gives us an idea. And where you just come out of the PEA, which is great, but you can't really do too much with the PEA. It's the beginning of understanding the economics around it, which, and I think you've outlined some numbers here, NPV5 numbers, etc., which are nice, but you need to do more. So how much more money, how much more time are you going to spend on Imperial to take it through to what stage to be able to have a conversation with people like whomever, someone like Equinox? What's that plan look like?
Yeah, no, that's a great question. I mean, I think one of the beauties of the Imperial Project is that Glamis, when they owned the project, took the project through a feasibility process. So they went right through feasibility, and this was the 90s, and this is Chester Miller. So, they were moving quickly. They were operating a mine about 7 miles away, a heap leach mine in the same county in California called the Picacho mine. That mine was running out of ore, and they wanted to get this one into production to, keep the employees going and keep their operation going in Imperial. And just down the road, about 8 miles the other way, Goldfields had just built Mesquite, which is still operating today. It's been operating for 25 years, produced 8.5 million ounces. So they felt they were in elephant territory and they wanted to get this thing going. So they drilled a water well. They did environmental studies, biological studies, archaeological studies, and they went through the full ringer and permitting process with the regulator, which is the Bureau of Land Management, the federal government in the United States. So we have all of that information today still on file with the BLM. So today we have an EIS/EIR on file with the BLM on this project. So on that side, where we don't actually have to do a lot of work. The key thing that's changed, however, and what ultimately caused Glamis to not pursue the project was California implemented a reclamation law that's very strict in 2002. This again when gold was $300 an ounce, which is that all metallic mines in California have to be backfilled. And at the time, backfilling rendered the project uneconomic and was what really caused Glamis to truly walk away and just put the project on the shelf. Good news is today, at $1,300 gold or $1,450 where we ran our base case, you can afford to backfill. It costs us about $120 an ounce in this project, give or take, to backfill the project at the end of the mine life. So we're now complying with all the very strict laws in California. So back to sort of answering your question, what we have to do is the county in California applies state law to federal land. As we know, the federal government in the United States right now is, let's call it pro-development. We'll be kind and not use any other adjectives. So where we have to do is we have to get support in the county. The county has 15% unemployment. It's the poorest county in California. It's right at the Mexico-Arizona border. They are in, even though they're Democrat, right? They vote Democratic. They're still in California, but then they have to live to these incredibly high standard laws, including backfilling. We can now come in and say, we're going to comply with all your laws. We're going to do everything you asked us to do in California, which are extreme. So we have to backfill and re-landscape the entire property plus 25 feet original topography.
Right.
And revegetate it. It'll literally be like we were never there once the mine is fully reclaimed. And we can live to that standard in the current environment. So we don't have to do a lot. We right now are budgeting 10 to 15 million US dollars over 3 years to take the project all the way to a construction decision.
Got it. Okay, well, that was the bit that I wanted, which was, okay, so you're saying 10 to 15 million bucks more on the Imperial Project. That will take you through to construction decision. And then at that point, you will have been talking to numerous other mid-tier companies, majors, and said, well, this could be something that you might be interested in. That's okay. So in total, you will have spent maybe 25 million bucks.
Well, the 2.5 to today, that was Canadian. So yeah, we'll probably spend maybe 20 million US to get it through to a construction decision, which is pretty low cost because really we're much farther along the path than a normal company that just did a PEA because of all that history.
Are you at all concerned about some of this, whether it be federal or state regulation? There's backfill you've mentioned, but what else is there that could be a barrier to you? What are the hurdles you got to get over?
Yeah, I mean, like all mining projects, the most important thing is that we build the social license to operate. So a lot of that money that we're talking about in that 10 to 15 million estimate is on stakeholder engagement. So we've already put in what we believe is a world-class team from, you have local community engagement, you got to be up in Sacramento, in the political infrastructure, you've got to be out making sure we engage with, there are local native groups in the area, like everywhere in the world, you got to engage with all the stakeholders to get social license in the county, right, to operate. And if you can get their support, we'll likely be able to develop the mine. That's how we look at it.
Okay, and
so that is absolutely the biggest hurdle, and the only reason a 25 million Canadian market cap company can own a $343 million US asset is because there's a lot of perceived risk to go down that permitting path.
Well, I was going to get to that in a little bit. Yeah, I mean, whatever it is, it's $28 million today, market cap. I mean, how much cash are you sitting on?
We had 2.6 million at the end of Feb.
Right, okay. So pretty much all of that is earmarked towards Imperial, I'm guessing. And at some point this year, assuming we all get out of our houses, you're going to be raising a little bit more capital, are you?
Yeah, absolutely. Like right now, the business plan, and we are doing work on more than just Imperial interest. And we've decided that we're going to be the bright light in the market, and we're not going to slow down in our deliverables. We also promised the market that we would be exploring this year. And we actually have a drill turning right now as we speak on our project in British Columbia. So we've got assays starting in the lab. Yep. Yeah,
I saw that. We'll come to that. So again, I'm just trying to build a picture of how a portfolio gold company creates kind of cookie cutter approach to creating shareholder value. So I think obviously Imperial Project is good. Will you be drilling any more? Will you be trying to increase the size of the resource there between now and 3 years' time, whenever you are ready to exit?
Yeah, absolutely. Subject to share price. So
of course,
the short answer to your question is, in our budget this year is more than the cash we have in the bank, because our belief is that the market is going to wake up to core having a quality asset. Let's just, right? The market can perceive the risk as the market wants to perceive the risk. It's our job to get out there, and through doing work and being on the ground, getting out there, we want to show we can drill. So we are going to permit some drill pads. We'd like to be out there, capital dependent, in the fall of this year, testing some of our regional exploration targets for new discoveries, drilling some nice core holes right through the old drilling, through the middle of the deposit to test geophysics underneath, and to give the project team some more modern core quality data. So we do want to get out there. And I think all those little baby steps showing we can work on this project, showing that we can work with the local communities, will all help bake that net asset value of the project into the market cap of the company. And like everything in mining, it takes time. And Mark's got a good plan to get out there. He's got the team in place now to get out there and do that.
Yeah, I mean, I like it. I mean, I also like these types of companies, as long as they continue to deliver. And and sorry to belabor the point on Imperial, but I just want to understand like how you're piecing that thing together. And if I think that you can piece that thing together, I might assign you some additional value to the other three projects, which perhaps at $28 million you perhaps aren't seeing at the moment, right? So I think that's what I feel the market is trying to understand from you. I mean, I asked the obvious question. Do you think that someone like Equinox is looking at you?
I don't want to speak for another company. I mean, logic would say Mesquite is a mine that's been operating for, something like 25 years. On paper, they got a fairly constrained footprint. On paper, they've only got 3 to 5 years of mining plus residual leaching left. You think logically there'd be an extension there. However, we don't want to rely on whatever decision-making process one individual company might have, because maybe they decide to go another way, and that's just a cash cow for them, and they don't want to invest anything more in that part of California. So we went out and we bought the original project from Goldcorp. We bought a specific set of licenses. We took some of the money that we raised from Eric Sprott in August. That was about actually $500,000. And we did the largest claim staking in California since the gold rush in the 1800s. We staked 1,000 claims to capture the entire 28-kilometer trend between Mesquite, our deposit, and that old Picacho deposit that Glamis operated. They're all connected on the same structure. And the rest of the ground in between those mines is unexplored because it's under thin layer of sand and gravels. And the 3 deposits that have been discovered all outcrop. So we believe there's a good chance of greenfield discovery of another deposit in between those. So we've set the project up so it's got not only a project in the middle that's got good exploration potential, so that a standalone other mid-tier miner could come in and say, hey, this is a good project for me too.
Beautiful, beautiful. Okay, so with Imperial, like it, you're going to use the drill to kind of expand the resource, extend the life of mine. Nice project for someone to step into, and then cookie cutter approach happens. So I saw the announcement on FG Gold recently. you're doing a little bit of work there. Can you give us a sort of idea of what your plans are there?
Yeah. I mean, FG Gold, I look at the portfolio. So Core has the three projects that have resources, and how do we get the value for those resources into the market cap of stock? How do we deliver that to Core shareholders? Really, we've got the ounces. We've got to convince the people that those ounces have value. And Imperial, that path is the PEA and then advancing that project down the permitting path to unlock that value. At FG Gold, it's quite a different value proposition. The 1 million ounces we have at FG Gold are very low quality ounces. They're 0.8 grams per ton in British Columbia, which quite frankly are probably never going to be mined, at least not in any time in the near future. But what that resource does give us is it gives us a great data set, because what we like about the project is only a small part of the rock group that hosts that gold's ever been drilled. And because of the low-grade nature of the way it was drilled in the past, they've really just left us a really good exploration data set. And so we went and we tore apart all the individual assays inside that make up that resource. We then looked at, can we figure out, no one's ever really spent a lot of time trying to figure out what is controlling the higher grade portions of that mineralization. There are some really nice high grade intercepts within this bulk disseminated deposit that they were trying to define. So we're going back and we think we found a few of those structures, and we flipped the drills around. We're now going to drill down those structures and underneath where anyone's ever drilled before, and try and show if there's the kind of grades that would be worthy of underground exploration. So we're trying to change the quality of those ounces by a small drill program. So we got about a 2,000 meter program, expecting about 10 holes, testing some of that structure and showing that it extends at grade at depth.
Okay, so what is
changing the quality?
So what does that tell us in terms of the way that you were thinking about spending money? Obviously, with $2.5 million in the bank, you're going to have to go out to market to raise some money. Have you got an idea of what you're going to go out to market and raise, the quantum?
It's going to be very dependent on the share price. So as you can tell from the way I'm describing the company, a lot of the things we're doing are discretionary, right? We could do nothing but give Mark the money to go engage with stakeholders and advance permitting Imperial.
Right. No, but
that's the curl up in a ball and don't do anything else strategy. We like to be more aggressive than that. We think we've got projects of merit. So share price depending, we'd like to go spend $1 million to $2 million advancing that BC asset if those first few holes are successful, but it's obviously success based. The first holes look good. In Canada, you've got the option for flow through financing and other things that give you tax advantages for doing work in British Columbia. So that's sort of a distinct path. The exploration work in California is completely discretionary, and we'll only do it if we've got a share price that'll justify raising money to do that work. But once we start the permitting of Imperial in California, that's the priority for capital in the company, because that's where we got to keep that rolling.
Okay, so again, I'm just trying to work out how you work out what the order of play is and the best use of money is, because as you say, some people would choose to hunker down, and that's fine. That may suit them. You're being slightly more aggressive on the front foot, and that's fine too. But in terms of the way you deploy your capital, because there's not much left at the moment, you're going to have to work out how do you think you can generate market conditions allowing, we'll obviously have to say that these days, is
totally.
We saw
it's a big discussion at the board level, believe me.
I bet it is, Scott. But last year, likewise, even before any of this situation was here, people were choosing to do things, creating catalyst moments in their head, which came and went. No one cared, right? The market didn't care, didn't react. Even when gold, started, the price started to move in August, September last year. So again, it's management make the decisions which drive people's perception of what the reality is and the market cap should be. So you think by spending money at FG to try and work out what it is that you've got is a good use of time and money for you versus whatever you could be doing on the other two assets. But you used a phrase there and said, at the moment the information that you have, no one would drill, no one would mine that. So what it is that what do you see there? Why have you chosen this as the next target? Because it doesn't sound anything like what you've got at Imperial. So what are you going to try and create?
Yeah, it's very you're right. It is very different. I mean, we're trying to take an asset that was bought at very, very low prices and deploy a little bit of, call it, very expensive equity capital to show that that asset has merit. That then becomes like anything else. We believe it becomes an asset. We can then choose to bring it in, have enough information to attract an earn-in partner. So maybe another company comes in and earns into that project, takes over the spend, and they go running, and we get left with, a portion of the project, or maybe we outright sell it to fund the main project at Imperial. So we are the amount we're spending is very discreet, but it's really meant. I'm a pretty simple guy. To me, it's like arm waving, saying, "Hey, this asset can be something, and it gives us another chip to play in the company, get some value for these ounces."
Beautiful. Okay, you've helped me understand where this sits in terms of your mindsets. Imperial is number one. You've got to advance that. You want to do it in a non-dilatory way. So you think you can spend a little bit of money here at FG. You can create something which will attract someone to either farm in and take over the costs, or a large proportion of the cost, or an outright sale. So that's what that is to you. So let's talk about what the other two could be. So if we look at Gold Creek, for instance, also nearby in BC, is that a similar story? Is that what you would hope to do there?
Yeah, too early stage.
Got it.
So there are drill holes with gold intercepts there.
Okay.
But I think the amount of money we'd have to put in there to take it to something where it's tangibly monetizable, I don't think it's quite
so
there.
Let's park that. So Long Valley, what's the plan there?
Yeah, Long Valley, we did a small geophysics program and compiled data so we could internally understand what it was, and we're working with the regulator there to permit drill pads. Beyond that, we'd like to drill it. We think there's good targets, so we will allow other companies to sign CAs and look at it. Maybe they want to fund those drill targets, or down the track, we'll at least have those drill pads permitted, or we could go do some work there to further define that asset. But right now we're not going to do any drilling there until the times are different in the company.
Got it. Okay.
But it would be but I think about it in a similar way. It's if we can attract, you want to have as many. I came to a portfolio company because I want to have as many options as I can in the company to horse trade assets to make sure that the company is successful. And we believe these we're talking about them, we're putting them in the investor presentation because we believe they are real assets. And to prove that, you have to do some technical work, and because the assets haven't been worked since the 90s. So again, a little bit of capital to try and define what it is.
Okay, so that's really helpful, and I do appreciate that. So the reality is Imperial is the golden child. The BC assets may, certainly FG may result in some cash or maybe some shares or have some value if you could sell it, but it won't necessarily be meaningful because you're not going to spend too much money at it or on it. The other Gold Creek is even earlier than that, so it's going to be a while before you can monetize or create value from that. So it's fair that the market does not attribute value to those at the moment. With regards to Long Valley, is that something that you would look to develop as far as you're doing with Imperial, or does that not have the legs?
I think it depends on how Imperial's going. Like if we go down the track and for whatever market circumstances we're here 12 and 24 months from now, we're about to get a record of decision on Imperial, which would take it very rapidly to production. It'd be nice to be able to point to another project that could be the next, horse in line. In that case, I think Imperial does have great legs to actually be a mine. It's a very, very shallow oxide gold deposit in a place where those types of deposits, if it was in Nevada, it would have been mined in the 90s. So it's something we're going to hang on to for sure. When it kind of comes into play in the company, I think you're asking all the right questions, and it is the same discussions the board have. How does it fit in it? We believe it's a real asset. When does it have any value? Yeah, we'll see.
Okay, because it's at the moment Imperial, you're going to take it down the line to, decision ready in terms of building. So, but you're not mine builders, so there will be an event at that point in say 3 years' time. Aren't you going to need to, as a portfolio gold company, start stocking up on other assets that you could also be looking at, or developing? Or else this is a very short life company, isn't it?
Yeah. Maybe it is. Like in the end, this is about per share value, right? Core, I hate to beat on Core only being a tiny little company here, but all these things we're talking about are in a, whatever the number is today, we've had a decent share move, but say it's a 30 million Canadian market cap company. If over a period of time we can monetize these assets for whatever number of multiples times that and roll up the company, there's nothing wrong with that, because it is in the end about shareholder value. It's not about having a long life company.
No, that's fantastic. But again, you're really being very clear with shareholders and people wanting to come in, what this thing looks like, and I appreciate that. How many shares have you got?
I have, in fully diluted, exposure to 5%, and I own outright 2.5% of the company.
Right, that's pretty good.
And then management as a total, because the two founders that founded it privately own 45%, and a little bit with the board. So collectively, insiders of the company own 50% of the equity. And then Eric Sprott's at 12 and Macquarie's at 5.
Right. Do you think that's part of the problem? There's not a lot out there for retail to trade?
That is exactly part of the problem, where, people always ask, retail investors often ask me, Scott, are you going to dilute me? I feel like almost saying, absolutely. Like, this is like a startup company. We've got mezzanine capital, and as long as we continually raise that capital at higher prices, this is good for you. We need liquidity. We need more shares trading, because that's the only way eventually down the track we can attract institutional sized investors that could, because I go talk to the Franklin Templetons and the biggie funds of the world. And they're like, oh, that project could be really interesting, but I can't buy your company. So, we got to get from there to there, and that is an exit point for someone supporting the company today, is when it matures to being on, in indices and the VanEck ETFs and those types of things. There's exit points for shareholders along this journey as we try and get value in the company.
And what are the institutional guys saying to you in terms of what you're doing? Is that they're happy with your strategy? Are you getting phone calls from Eric Sprott on a monthly basis?
Yeah. I think Eric, you got to call him. He's the more of the call taker, but we certainly have a regular dialogue.
Do you remember us? Is it that?
Yeah.
I know he's placed a lot of bets, right? He's placed a lot of bets with companies of your type, and he spots trends, whether it be gold, silver, uranium, whatever he's into for that phase. But so you're not necessarily getting a hard time for any of the institutional guys. What are the retail guys worried about? Is it just the fact you haven't really had much to say to the market?
Yeah. I mean, when you talk to a retail investor, they're very interested in, what news flow do you have that's going to drive your story in the near future. And that, quite frankly, was part of the reason we chose to pursue both exploration and development. I think if we were already a 100 million market cap company that could raise $10 million at a reasonable amount of dilution to fund Imperial, you would make that very cleanly the only thing you do. Because I like your line of questioning, because it is very much the business plan of the company. In a bigger company, you would make Imperial probably your only asset. That's all you talk about.
That's what I wanted to get at, because when people use the word portfolio, I'm just trying to understand what it means. It means different things to different people, right? And I'm not saying, not judging you, I'm not judging them. But we need to be clear about those monetization events. How much money is spent, how much time is spent. Are they a distraction? Or is there too much reliance on being able to do something with them? Because you can't always get a farming partner. You can't always guarantee you're going to be paid in cash. There's a lot of moving parts here. So, but look, I appreciate your time today, Scott. That's a really nice story. I mean, I like what you're doing with Imperial. It sounds to me, obviously, I hope there's no licensing, permitting issues. I know California is a little bit trickier, as you say, than somewhere like Nevada. But, you got the fundamentals there. The path forward. It doesn't sound like you need to spend too much money to kind of get it there. So keep it up. Keep talking to the market.
Yeah, thanks. Yeah, it's location. So we're in a nice location in California, and we're excited to go forward. Thank you very much for taking some time to listen to the Core story.